Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 120 for March 24th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So over the last couple of days, about 30 people submitted up to 5 symbols each, and I've put the list together of the top requests, and we're going to go through as many of those as we can today. So we are recording this at 4 p.m. Eastern Time, and today I've arranged for Michael Filighera and Jim, the option professor, to join us, and Jim will be moderating, so I'm going to go ahead and turn it over to him.
Okay, thanks, David, and welcome everybody. Again, a crazy wild day, the biggest move since 1933. I don't think you want to have a lot of reference points to those years, but it seems like that's the reference points they're talking about a lot lately. Today we've got Michael with us, who is going to explain, again, a little background on yourself, Michael, and also what you're doing down at your firm and the website.
Again, my name is Michael Filighera. I am the owner, the proprietor, all of the above for logicalsignals.com. And those that have been hearing me over the past few months, it's finally going to happen. I have talked with my technical wizard who builds my websites and gets that done. And the new website will be ready probably within a week. And I'm going to be focusing more once I get it going on providing commentary, and I haven't decided on whether it'll be, free or small charge, but it'll be commentary on futures, on trading futures and the markets.
Okay. Well, at the end of the broadcast, you're going to be able to tell people again how to get a hold of you, and if you have any special offers. Again, David does like to go a little bit of an overview of what's going on, so why don't you let us know what you're thinking as far as the current environment with regards to stocks?
I sure will. And what I'm going to do is I'm going to put up the S&P chart. Now, this is the S&P daily, and as we can see, this was the high. That was the first leg down that we actually completed last Friday, or actually yesterday. And then today it just took off. So forgive me on that one. And so what I think is what we're doing is we've only had the first leg down of this corrective phase or new down cycle. And what that is basically telling us is that we became very oversold, and we're just bouncing off of that oversold level and putting in our first retracement, or our first bounce higher since this huge decline took place. Now, I put in Fibonacci levels so you can catch those real quickly. It almost got up to the 0.236 retracement, which is at 25.52 3/4. My anticipation is that it's going to eventually work its way up to the 0.382, and that's 21.41. Now, if we take a look at the larger picture, what we're going down for is the coronavirus, granted. And since we now are getting a little bit more of a grip on how this country is going to deal with it and what we're doing and getting equipment that much needed out to the states, and that the individual governors within the states are putting things together, which is really going to improve the situation greatly. But we're still, at least in the state of California, we are at a stay-at-home process, and they're basically telling us now, do not go outside unless it's for essential travel. And what we're taking that as, and they're coming back down because it seemed over the weekend a lot of people went to the parks here in the state of California, and just instead of doing social distancing, they just kind of clammed up. That's all being done in terms of the closing the parks. Now, overhanging all of this, and we still do not know, and this is the important factor, we don't know exactly the severity that this is going to hit our economy. We're getting a lot of, people on the outlying views saying, well, we're definitely going to go into a recession. And I've even heard some talking about that we're heading into a depression if we can't get a grip on this coronavirus. I do think that we're going to see a lot of hurt coming on earnings reports that should be starting very quickly, or they might be held off. I think second quarter GDP was going to take a huge hit. Now, whether people are going to expect that and react to it, I don't know, because what we really need to figure out is how quickly we can restart the economy. And that means people cannot be staying in the house. We all have to get out. We all have to start working. We all have to start buying, et cetera, et cetera. So I'm not going to even guesstimate how long that's going to take. I think that it's going to take several months before we kind of even feel what this whole thing has done to our economy. So when I see the Dow up 2,100 today, it's nothing more than a bounce. And if even in the worst of bear markets, we had recovery bounces, we had the market moving in both directions, the trend, in my opinion, remains down for right now. And so I'm not telling anybody, oh yeah, time to jump back in. If you're nimble and you know how to move in and out of a market and you know how to play volatility, by all means, continue to trade and trade well. But outside of that, if you're a long-term investor, I think that you and your financial advisor need to sit down and decide, do I need to get out and put everything into cash? And
What's the 10-day moving average right now, Michael?
Yes.
What's the 10-day moving average on S&P?
Well, actually, the ones that I have are the 4, the 8, and the 50, the 200, and the 100.
I got you. So that 8 is the yellow one?
Yes. No, that's the 4.
The 4. Where's the 8?
The 8 is the blue line up here, sitting right above 2650.
Oh, yeah. I had a hard time seeing it. Yeah.
Yeah, I'm sorry.
And so the 10-day would maybe be a little lower, because what I was looking at on the 10-day was around 2550.
Yes, the 10-day. Yes, exactly, because you can see here that the 100-day is above the 200.
Yeah, because some people do use the 10-day as a resistance zone. So that 2550 area, would be interesting to see if it could surpass that, or if in fact it not. And the other thing is the VIX today is almost inexplicable that it went as low as 36, as high as 61. But on my screen, I'm showing 60. What are you showing for the VIX right now?
I'm showing let's just take a peek. And I will.
Because, when the volatility gauge is elevated as it has been, you've got to expect huge moves in both directions.
Looks like the VIX closed at 61.
Now, that's inexplicable to me because, again, we had a 2,000-point move on the S&P. And for whatever reason, the VIX went from 36 back up to 60 and was hardly down a point or so. And
yeah,
I don't know. I've been in a long time, and that is very weird.
Well, just to comment on that, I can't comment on exactly what forced the rise, but what I can say is that if you notice that the high is at 85.47, and then last week was when we hit that high, and then we got reports that REGN, which is a clearing firm in Chicago,
right,
had a client had a very large and position in the VIX. And they blew out. Mm-hmm. And so what REGN had to do was come in and buy this huge position, which again is why we saw volatility on that particular day just soar. And we're like, well, wait a minute, it's just not matching what's going on in the market. So it really put a level of confusion into a lot of traders. And then as soon as they were done cleaning up that position on Friday morning-ish, you saw the VIX collapse.
Right. So
it'll be
interesting to see if the 2550 barrier up there with the 10-day might be an area of resistance, and it'll be also interesting to see if this VIX recovered back up like this for a reason. And obviously, if we go back into the soup, that would be the reason, right?
Well, I agree, but I don't think that they're really. Unless there's traders that really believe that this is too high and we're going to nosedive again tomorrow.
That's what I'm trying to say. I mean, if we can't get above the 2550, which is your 10-day, and then the VIX is elevated, maybe it's a situation where people are counting on the thing rolling over.
Right.
And as you were saying, the economic numbers are going to be a little bit frightening. And we have heard all the Fed easing, So the numbers are already out there. And then, we're going to get this stimulus package. And so
Right.
if it is by the rumor that the Fed's going to come and the stimulus package is going to come out and sell the fact, then that might be,
And they said they're close.
yeah.
So that, you're right. That could have been it. Or there's additional firms that, it shot down. They didn't get out, or they couldn't get out fast enough, and they got taken out, and boom.
Yeah.
It just,
It's just,
I don't
the VIX thing has me a little bit off balance because of the fact that it normally with this kind of a day would be
Yeah,
dropping substantially. I guess earlier today it did drop substantially, as you see on your graph. It did earlier in the day.
it
Yep.
did.
Yeah.
Let me just see how this kind of went out. Let me just lower this to an hourly. Let's take a look at the hourly. That was a plunge. That was in a 1 hour plunge from 56 to 36.
Yeah.
And then it came right back up, and then they just brought it back up.
Yeah.
Either somebody was very long volatility.
Yeah, that might be. Obviously, the explanation could be that obviously the volume and the order flow was imbalanced, and therefore
Yeah,
you get that kind of move.
they got taken out, and they got boom. That was them getting out of all that volatility, and this was them bringing it back. I couldn't tell you.
Well, do you want to jump into some of these stocks that these guys are looking at and
Yeah,
get a little bit of insight? The first one up is Zoom ZM, and today it was down very hard. And again, it went up to 165, which was 100% above its 200-day moving average. And I think
yeah.
if things are going to settle down, maybe that Zoom thing was just a little bit overdone. What do you think?
I agree with you 100%, and I want to go back to my daily chart because it's going to tell us a little bit more.
Looks like capitulation up there.
Intraday stuff, but the thing is like we have to look at, like today, for whatever reason, I was seeing 175 on my hourly. Now this is 165. Regardless, I think that was based on the fact that we didn't have any idea how long these shelter-in-places were going to hold, or as more states added, it's driving more people that actually go into an office having to stay home. Zoom was the only one where people could really go to meeting. I think also, I don't think it's a public company, but that one also would have been really scooped up as well.
Right.
Now, I agree with what Jim just added, the fact that if we're starting to get signs that this whole thing is easing and people will be able to leave their house, go back to work, they're not going to need Zoom meetings anymore, and therefore they'll cancel all those contracts. So it could have just been, again, buy the rumor, sell the news. But again, I would suspect it's going to go back up because it's going to probably follow volatility, and it's going to follow the market. If the market drops again because coronavirus is just really whacking a few cities, and God bless you people, if you live in New York, please stay safe. But I would suspect that it'll rise again. If not, then yeah, this thing's going to fall back to where it was before all of this started, and that was closer to 100 than 200.
Yeah, the volume today was almost 3 times normal. So not only did it reverse here, it reversed on some pretty significant volume. So it'll be interesting to see, how things pan out here. But that
Right.
that high 165 looks a little bit like the TLT 180.
Apparently,
Yeah,
GoToMeeting is owned by GoToMeeting, and GoToWebinar is owned by LogMeIn Inc. under NASDAQ LOGM.
I don't know.
Yeah, it's LOGM. You're right. Yeah.
Yeah,
Just putting that up real quick, as far as I can see here, that one held in there a little bit better because it hadn't been bid up as much. I think probably because it's not as popular, right?
Well, no, you're right, and they're also more expensive. But I mean, if not, I just think Zoom, on a long-term basis, I like Zoom, but I think it needs to settle out and get back to normal business, and then we'll know what fair value is for the stock. I actually would not touch it. I've had people say, "Oh, you got to buy it because it's going to go to the moon." It's like, and it did, and yeah, why? Because they took it all back already.
Yeah, if this everyone is going to try to go back to work at Easter turns into a little further date, maybe there'll be another rendezvous to the upside, huh?
I think that's wishful
'Cause,
thinking on part of
yeah,
our
well, I mean,
president.
that
But
wishful thinking and being up 100%, obviously you'll get some sellers, right?
yeah, yeah,
You know,
it's
you don't want
true.
to be the last guy out of town when you're up in the ozone here, right?
Yes,
Yeah.
yes. So
Obviously,
it doesn't have a
22
long-term
million
plan.
shares, 22 million shares is evidence that obviously when you scream fire in a crowded movie theater, a lot of people want to get out.
Yeah, yeah. And you can
All right.
see that running to 165 was what, about 30 million shares? So volume remains decent,
It's off the chart, yeah.
but yeah, I would not go into this one unless you're very nimble and you move in and out of options quickly or move in and out of stock quickly.
All right, let's take a look at the next one, which is Roku. And Roku, obviously, like everything else, had a pretty good day today, coming off of obviously a huge sell-off down to about 60.
Yep.
It had rallied up to 101 today, so that's a $40 move off the low, which is certainly very, very impressive.
It is. And I think Roku stands on better ground than, say, Zoom, because Roku's going to get a lot of new customers or people buying the software because we have to stay at home. And I'm
Right.
sure that has contributed substantially to the rise off of the recent lows. But at the same time, Roku will be caught up in market moves. And that will be the big test. So if you're long Roku and you're thinking it's going to go back above 125 or 130, here's your moving averages. Now, again, this is an 8-day and it just zipped above and you saw what happened. It didn't come back and test it. It got close, but it did not. It's well above the 4. I'm waiting for this 8. I'm sorry you can't see it. I could try to change the color. If the if the 8 curls up and cups today's action, it's a buy. Then I would suggest that it's going to go to at least 108, 110. But then here's your resistance. You got it at 109, let's say. You're going to have it at 114 and a half, and then you're going to have it at 118. A break
Yeah,
above 118.
this 100 area seems to be, you know, plus or minus a little bit, seems to be a neighborhood. You remember when it got way up to 180, it came down to about 100, then it had another
Yep.
rally, then it came back to about 100, and then it kind of broke from around 100 here. And so this neighborhood that it's
Right.
trading at is probably, you know, a little bit of resistance somewhere around here.
Right. I would agree with you and I think we got it at 110, which is where the 50-day moving average is sitting.
And this thing did 17 million shares today with
Nice.
a 50-day moving average of only 13. So
Yeah.
it did pretty good.
Yeah.
Not unbelievable, but a little bit higher than normal.
So again, to be looking for, do I get in now or do I get out? It's like everything is going to depend on how quick and how nimble and what your window of time is. Are you looking to put this in a portfolio and keep it? I don't suggest making a portfolio adjustment for the next 6 months. I mean, in terms of for the next 6 months of trading, based on the fact that we don't have enough information to put a bottom on where the economy is going to kind of slide to, or even where these markets are going to go to. We don't have enough information and not enough time has gone by. So I think it's very difficult to make any portfolio decisions on adding or taking out unless you're just willing to say, you know what, I'm going to take advantage of this nice up day. If we get another one tomorrow, I'm going to move stuff to cash. Because I think
A lot of it has to do with what this consumer is going to do too, Michael, right? There's 70% of the economy is consumer spending. And obviously, we don't know with any kind of certainty what kind of psyche is going to be on the consumer when they finally come out of the houses.
I think what we'll see is that the consumers are going, and Costco is going to do well, Safeway, which is Albertsons, is going to do well, Lucky's, all of the food stores.
The habits that they've just gotten into, do you think will extend? In other words, the habit of not going out to eat, the habit of trying to,
Yeah,
do a little bit more conservative lifestyle. Do you think that could be happening?
I do. And what is concerning right now to just a lot of people in terms of this virus is that it just seems that the younger people, 30 and under, are not taking it seriously. And the
Which
only
is
thing I
not
can
really,
say to
which is
that is
not
that,
really shocking because, you know, the
no,
younger
it's
you
not,
are,
but
the
it's
more,
very
yeah, the
important that
more
they do.
risky you're going to be, right?
It is. Well, the thing is, it's like, I think that group and everybody needs to realize this virus does not discriminate against age, race, color, no matter. There's no discrimination involved. And so if you go out, you can become infected and then you could pass it. You're crossing somebody in the street, boom, you could pass it to them. That's how easily this is shifting from one person to another. So on that note, there's just too much out there yet. So I don't think that we have a grip on this. So if you'd like to day trade, absolutely play the volatility, go in and out, play your stocks, but pick your points and understand if something moves above and below moving averages. What does that portend, and what does that tell us about what's going to happen maybe for the next hour or so? These are important things. But if you're just a portfolio trader, I probably would hold Roku. I would pick a point down below where it's like, no, I'm not going to do it. And Jim, I like what you normally will say. If you're sitting at a 50% profit, go ahead, get out of some.
Yeah.
You know,
If you get a double, you take off half and you have all your money off the table. Microsoft is the next one up. Obviously, this is one of the darlings of the world. And when it went down to the 130 area on the drop, there was a lot of support there because that's the high area of between last year, June and December. So it was a breakout
yeah,
point in December last year, November, December. So obviously it did catch a bid as we went down towards the 130, 135 area.
right.
Now, obviously, we've snapped back up here, and I'm sure people would like to know how you feel about picking up Microsoft anywhere in this neighborhood for a longer-term deal or even a shorter-term deal. What do
I
you think? What's your opinion?
Well, I like Microsoft. I think Microsoft will be a survivor of all of this. No matter how long it takes, I think Microsoft will survive. But at what level? So I think we need to determine, or you need to determine, what is fair value right now? What would fair value be if we drop another 20%? All the possibilities remain on the table. So again, this is all, if you're portfolio driven, wait. I don't think it's going to make that much of a difference if you get in at 150 or if you get in at 160.
A
Because
lot
the
of stocks have dropped down to the 2016 level and even the 2011 level, which was the sovereign debt crisis, which really was when countries over in Europe, they may not be able to refi their debt. And that was the big crisis in 2011. And I
right.
think now people are wondering how the corporations are going to refi their debt as it comes due. So that's why I think some things have dropped down to the 2011. This thing has hardly dropped down to the December 2018 level. In fact, it is still above that level, which was more in the 100 neighborhood. And so,
Right.
but it is such a darling of everyone. It's the last thing people really want to sell because of the cloud, because of the 5G, because of the consistent cash flow that comes in.
Right.
So, yeah.
And Microsoft also split many times, and so that kind of throws off pricing. But I think here is a level that I think that Microsoft can actually come to. It hasn't even gotten close to its 200-day. And I think that's just because it's a well-run and it's producing software that is going to help companies. So, I mean, it continues to do business, and I think that is great, but it will not be outside of a larger market move in either direction. It will not just
But
go
it has held up much better because obviously the cloud computing that they
Yeah.
dominate in
Oh,
is
absolutely.
not a
I
business
agree.
that's going away when we come back into the business world.
Possibly,
Yeah.
but I hear what you're saying. I think at this level, you can see on a weekly basis, the stock is still extremely oversold.
Hmm.
And so just on a technical basis, I'm like, yeah, I'd be picking it up here. But again, it's $148 right now. So, you know, you got to match your portfolio to what reality tells you.
Yeah,
But I think
people really like the growth sector. It's the last thing that people seem to want to sell, the semis and the tech.
yeah.
And
Well, I think because
they
they
have held up
control,
very, very well during this decline, don't you think?
I do. I do. I think some have come down. I think, you know, and particularly, you know, but what I really want to tell people as well, and I don't know if you'll agree or disagree, you know, when things got up to those highs, and for Microsoft at $190, there was a lot of speculation in that. There was a lot of fluff in that. And so I think what we're seeing in this initial drop is just all of the fluff that got pushed into the market being taken back.
Hmm.
And and as I've told people in the past, I don't believe a major decline necessarily speaks volumes to the fact that Apple's a bad company, Advanced Micro, Amazon, Boeing, or Boeing I'll leave out for right now, but et cetera, as you come down the line. I think what we need to pay more attention to are the banks. How solvent are they going to remain? What's going to happen there? But as far as the tech industry, it led us on the way up. I don't see why it wouldn't lead us into recovery.
Yeah. With regards to the next one, it's right up your alley, and I'm sure you have a view on it, an opinion, and a forecast. What do you think of GLD?
I think that gold stunned the crap out of me today. And I am a
Well,
gold buff.
did you hear about the news that the mines are going to close? So obviously there's a short squeeze because the production's going to be put on ice. That's what I read.
I read that. Yes, I heard that same thing. And of course, boom, gold opens, you know, gaps higher over $100. And I have a long-term, and I continue to hold long-term core position in gold.
Yeah.
And my reason behind that is that gold is a storehouse of value, whether you paid $1,900 a troy ounce or whether you paid $9 a troy ounce. It's still a storehouse of value. So I don't move into gold because I think I'm going to make a fortune. Granted, that's coming just because of the prices you paid and where gold sits now. So I feel that what's happening now, it's a short squeeze, like Jim just said. Now, once that short squeeze is over, it's going to come back to a more realistic level. Because what I felt was happening when it got to 1,700, it pulled off. And you saw them sell gold in the fact that this coronavirus was like chewing up the world. They continued to sell gold down below 1,500. It rallied back up, and then boom, today it just jumps. According to GLD, $20. So I am always in favor of owning gold. Now, you kind of have to pick your point where you want to get in, establish a position. If you're using GLD, love the options. You can put on call spreads, you can put on put spreads. There's all things that you can do. And in fact, you can use the options to hedge a physical position in gold very easily. And so, yes, I always recommend buy gold and just learn how to play it using the options to protect you against the larger moves.
Can you put GDX up on the screen? I just wanted to mention that. That's the gold miners.
The gold
Because
miners
mhm.
came up because, again, it's short covering, because you see what happened. Gold miners sank all the way to 16.
Yeah.
And then today,
I wanted to give a quick opinion because, full disclosure, I own gold miners, but I own them at lower levels, and I wanted to very much add to them. But I had a line in the sand right around 30 on GDX, and I was really playing the Missouri show me state. If you can close above 30 and show you can maintain above 30, it opens the door to 40, 50, 60, right? But if you can't, then obviously you may see it roll over. And again, that's exactly what happened. So my opinion is obviously you hold long-term positions as a percentage of a portfolio, but
right,
to really be interested in adding, you still got to be showing me that you can get above this 30 number and hold. Because like you're saying, if this is just a unique squeeze, on the physical metal for a short period of time because they can't deliver it, you know,
Right.
but it's
Right.
only short term, then obviously the stocks may not go up because the stocks are more longer term holders, not just speculators on the short run maybe. So
Right.
again,
And
you can see from GDX, if you can get and stay above the 30 to 32 area, it does open the door for a lot of action. And if you
right.
can't, it might be telling you that this squeeze is temporary. So it's very
And you
interesting
can,
right now.
I think it is very interesting. And what I will add, particularly because this is a gold miners ETF. So these are the producers. These are the ones that go into the ground and they get it for us. And I think you have to go individually to what mining stocks are inside this particular ETF. And then each one of them is going to tell you what their break even is, what the price of gold needs to be for them to go pull it out of the ground, clean it up, and deliver it to the market. And each company has a different uh, valuation in terms of the physical price of gold that they need to get to mine. So the reason those miners came out and said, we're going to start shutting down is because gold was dropping too fast for them to go in and pay everybody to pull it out of the ground and not make any money. So again, if that situation reverses because the price of gold continues to rise, they'll go right back in there and they'll start mining again. And then we'll see that reflected in this index.
How
So
about
those are the
putting NEM up on the screen, another gold stock that's very popular, Newmont Mining. It looks like
Newmont
there's a lot
mining.
of support in the 40 area, and it
Oh,
looks like
tons.
yeah, and it looks like if you were a buyer of it, that's a pretty reasonable line in the sand, and it's only $7 off the current price. So, you know,
Yes.
that might be more interesting than even the broad-based index, right?
And again, Newmont Mining, and Jim, you're the expert on this one, has options that trade like May wheat. They got great volume. You got good strikes, and so there's a lot of positions that you can protect and put together. Um, I'm going to give you a shout out here, Jim. Give Jim a call.
Well, no, I'm just saying this is a very interesting situation because it is in the sector of gold. You can see the metal itself has been very, very strong today, up about $100. Something's going on
Yeah,
with regards to the mines. And if something's going
yeah,
on with the mines that's going to be value, this chart actually looks a lot better than a broad-based index of the gold stocks. So maybe this is
I agree.
really the best of breed kind of thing.
Mhm.
And ergo, maybe that's why while it went down to 34, obviously it was a very temporary drop, and it's above these moving averages again. So you
Yeah,
know your line in the sand is somewhere around the $40 area,
I know.
and you know that
I
if it takes out 48.52, that it might have some real estate on the upside.
it could have
If you're
some.
bullish on the gold, this is one that
We can see
obviously.
on a daily that it does have, I use the stochastic momentum underneath all of this. That's this index that you can see underneath.
Mhm.
And I like it because you can see that the momentum is still pointing higher. Above this 50 line is where it would be considered overbought. And again, because it's daily, it's going to take a while for it to relieve that. And now it's going to build back up again. Again, I'm going to say if Newmont Mining or GDX or any of these are in your wheelhouse and you are comfortable trading them, then by all means, I really do during this time of uncertainty, I will go to options first. It's less risk and you can define your risk so cleanly that instead of just going out and buying a stock and throwing it into your portfolio, I like using options. And then once everything is settled and you've got a clear idea of what's to look forward to ahead, then convert to stock.
Yeah, another mining company that is heavy into copper had a big day today, FCX. But it's also got quite a bit of resistance above because it's been downtrending for a while. So it's an
This one has
interesting
been
one
in
to
trouble
monitor,
for
yeah?
a while though, so I'm going to let you talk about this one,
Oh,
Jim,
no,
because
I'm
it
just
to me
saying,
it's
the gentleman was interested in GLD, so we're trying to give him a few different things to take a
oh
look
right.
at here.
I think
Besides just
Freeport.
GLD, because, copper is obviously another metal, although it's an industrial one. And
Yeah,
uh, Newmont Mining is one, and another one is, I think it's Pan America, PAAS.
yeah, yeah. You're right.
And
Okay,
that's in the it's in the silver area, and that's up 23%. So, these things
But
might just be having bear market rallies because of the jump in the squeeze that's going on, or it could be a situation where they blew out a lot of speculators and a lot of leverage people got blown out during the big drop because it went from 26
yeah,
back down to 10. So
yeah.
obviously it blew out a lot of people during that drop. And if the metals do have a future, these are some of the ones that you could at least follow and then make your own decision how you feel.
Right.
But,
I think on this particular stock, though, please be very careful because even on a technical Elliott wave basis,
it's all over the
this
place.
looks like it's corrective and it's going to come back down and move below 482.
But I mean, the underlying market is also all over the place. So basically, the metals
You're
can be
right.
very risky because obviously they go anywhere they want.
You're
But
right.
the point is that some people like to have a percentage of their portfolio with some exposure to the metals in some way, shape, or
Right.
form.
Right.
Let's go
Hey
over
guys, have on the topic of copper, have you guys seen? I was reading a bit about this morning that copper has some very strong antimicrobial properties. So
Yes.
there after this there might be a more of a demand for copper to be used on like doorknobs and handrails and especially in hospitals
For medical
and
type purposes
high
more?
touch areas. Yeah,
It'll be interesting. It'll be interesting what uh, comes out of all of this. So that's something to keep in mind, for sure to keep in mind.
All right,
Copper's also been used to be an economic indicator.
Yeah, oh yeah.
Yeah.
And there, again, it's a very big China demand item when China needs it. And of course, people are trying to intimate that China is returning back to more normal situations. And
Right.
they are in all the different continents doing construction and making investments, Africa and other places around the world. So, again, they
I
still.
think we need to, I would urge caution on all of the rhetoric that we're going to hear about recovering and getting back out and getting back to business. It's
Yeah.
all rhetoric being
Yeah.
made by people that just want to put a comfort blanket over everybody. And I think that it's a bigger disservice than it is a service.
Yeah.
We
But
need to
again,
just
like I say, everyone's got an opinion, and
Yeah.
people could be right as well as anyone else. But you're right. Caution obviously on all this stuff at all times is a good idea. But
Yeah.
some people do have an opinion that's contrary to another opinion, and
Right.
Lord knows who's right until time goes by. The next one
Right.
up is Boeing, and Boeing obviously went down to about $100 or $90 or whatever, and then it came
89.
came up here very sharply. They said they are not interested in having the government be a partner, and if that's going to be a provision of their aid, that they would just as soon go to the debt markets and find people who want to buy their debt and bet on their future rather than having the government piggyback their future.
And that's
That's what
exactly what they did. They
that's what I
announced that
heard.
they're offering bonds today.
Yeah. But again, you are looking at 22% jump in it, and this is obviously a duopoly with them and Airbus, and it'll be interesting to see how things spin. But what do you think here as far as Boeing is concerned? Is the
I think Boeing is not
$100
out
as
of
bad
the
as we're
woods.
going to see?
I think that Boeing is not out of the woods yet, but I think that it's made some definitive moves towards that direction. And again, as much as we want to receive positive, when Boeing CEO reports we do not want to take money from the government because it's going to have some restrictions on it on how a corporation can use it. And unfortunately, that's going to be the way it is because they don't want a CEO making the decision. If they're going to give money to a company like Boeing, it's because Boeing has a lot of idled workers. And so it's to replenish their coffers and not Boeing's. And that's going to be the problem across the whole spectrum of where all this money, particularly to the airlines who take it very seriously about buying back their own shares. Whereas that's not what the money's being given for. The money is being given to help protect the workers because they're unable to work. So that aside, I think Boeing's problems are not over. Notice what we haven't heard. We got this news about, well, we won't take that. We'll just go put out more debt. that doesn't necessarily pretend to be a positive. If
Well,
the
obviously,
market,
their cash flows right now. They used to have free cash flow coming out of their ears, and now they're negative cash flow. Obviously,
yeah,
because all their planes are in a parking lot. So the idea
right.
would be is at some point they're going to leave the parking lot and get paid for, and that'll of course be helpful to Boeing.
I tell you what,
That's
I'll
the
buy
bet. I
Boeing
mean,
when I
if
see
you
it,
want to bet on Boeing, you're betting that all those planes in the parking lot are going to get moved.
and I'd rather wait for them to start moving out of that parking lot.
Yeah, yeah.
Then I'll come in and buy Boeing. In the meantime, I think Boeing's got bigger problems besides their debt problem, besides trying to just turn around that negativity that they're seeing on cash flow, is they still have that Max 9 sitting out there.
Hmm.
And that has not been resolved. And so we don't know what's really going to happen to Boeing's earnings.
No, you don't
That's
know. You don't know, but
so
you're not going to
quickly.
get it at $100 when you know. That's the key, huh?
Yeah,
In other
yeah.
words, once they know, it won't be at 100 or $89.
Well, I don't think that's going to
I
be a
was just saying, how
problem.
do you feel about this statement? I think that basically this is a huge margin call on corporate America because rather than
Yeah,
having reserves, so that if people take 1 month away from not spending money, the whole thing doesn't fall apart because you've got cash reserves. But if your cash
right,
reserves have been spent on buying the stock to get a short-term gain, and then you borrowed a lot of money in corporate bonds to also buy your stock. Now you've got not much cash to work with, and you've got debt out of your ears. And so when you come
mhm,
down like this with people basically taking a month off and the whole
right.
thing falls, it sounds like a highly leveraged system that is hitting margin calls, and nobody's got the money to meet these margin calls except the Fed and the Treasury, and that's why the printing presses are going through the roof.
I, well stated, my friend. That's very well stated. Thank you very much. Because I agree with what you just said wholeheartedly.
Yeah,
And I
blame it
think
on
that
the
something,
blame it on the virus, or you could, or if the virus didn't occur, it could have just happened because of the natural, the natural progression of a slowdown at some point, right?
right, right. And just with or without this virus, these markets were overbought and were going to come down anyway. It was just the trigger.
And
And
then
you're
the
exactly right.
accelerant is the lever. This accelerant is the lack of cash on deposit at
Amen.
the thing, and the leverage
Amen.
because of all these bonds. The amount of corporate debt that was issued in the last 5 years would choke a
Right,
racehorse. And now they got to
right,
make payments on that and stuff like that. So, it's really
right.
being
And I will
accelerated
tell you,
because of leverage,
yes, and the biggest one, biggest one that's been known is the shale oil producers here in the
Yep,
United States
yep.
and the corporate debt that they took on that, God bless them, Stephen Mnuchin managed to get the government to take over already. So that's why we saw this little bit of a scoop back up within the oil industry, but it's not over. I don't think it's over. And so I think what Jim just said, please write it down, keep it in your mind as you're thinking about stepping back in the market, because he's absolutely correct that as this continues to go down, margin calls, folks, they will continue to happen. And if you can't meet it, they start selling.
Well, that's why they're giving liquidity so they don't have it. I mean, but again, you have to realize it happened in '08 with the banks and the real
Yep,
estate market. And so
yep,
when they do this and they add the money, historically it has bounced back. So you
yeah,
can't, I mean, although it seems silly to have a debt crisis and then issue more debt to meet it, it
right.
sounds silly, but silly worked after '08. And I don't know, maybe silly will work after 2020.
And I think it's also very valid to add. It's like, folks, anytime there's a bailout, it's us that are taking the hit. We are the taxpayers. The government may be printing money, but they got to pay it back somehow. And the only way they can do that is taxes. So bear in mind all of that, because when these margin calls come, it's going to start driving stocks lower, bonds, anything that's getting that call. It's going to drive those prices lower.
All right, let's try to steamroll some of these different names here before we run out of time. Let's go to
Okay.
Apple because everyone in the world seems to want to own Apple, and
Yes. And I think
we
for
just
good
have to
reason.
wonder. They have a lot of
Apple
cash, which
actually,
is great.
they were telling me, now this would have been yesterday. So again, we're on a daily. So that's when Apple dropped back towards 2011, not 2000, 211, but then rallied strongly today. And what they were saying is that Apple dropped below a corporate value of being $1 trillion. I'm like, oh my
Which is irrelevant. Mhm.
It's irrelevant. You're absolutely right. That was my point.
What is relevant is they're reopening some stores on a very selected basis, and what is relevant is they're sitting on a ton of cash. And
Yeah,
what is relevant is they'll have a new product with 5G, and are people going to pony up to buy it? Those are three
right,
relevant things.
right. And so I think that what they may have to do is readjust their pricing schedules, how they want to price these products. Because if we've really seen this big downturn, you're right, are people going to want to pony up and pay $1,100 for a phone, or et cetera, et cetera. But Apple is a company that I'm very comfortable with, and pretty much at all of these levels. I love this pullback. I don't think it's over. It will continue to get clobbered as the markets do or don't. Okay. I think that because it's in every index, so it's in the S&P, it's in the NASDAQ. I don't think that, I know it's in the Dow, but I don't think it's in the Russell. I'm not sure. But as these index get hit, so will the stocks. So, but I like Apple. I would dip into Apple, but I would not be buying front month. I'd be looking further out because you want to get a low volatility trade in. And I'd use spreads, but I would definitely consider that, because like Jim said, and I totally agree with them, and it's easy to see, just look at their 8Ks and their Form 10s, which are just all their earnings and their reports and cash balances. And you'll see that they have a ton of money. So not only because they can pay their employees, and since they are a technology firm, their employees can work at home and the company can still survive. That's why we haven't really seen it. I don't think we'll see it. If anything, maybe this is where it comes back to.
All right, this next one is oil, and I think people want to look at this one. CVX, their CEO was on TV saying that they're going to cut their cap spending and that they have honored that dividend for many, many decades. And he sounded like their intention was to try to maintain it. And today, obviously, people love what they heard. It was up 22%. This is something that used to be 127 bucks, and it's down to 66 bucks, and it was as low as 50 bucks. And Trump is talking to the Saudis. Maybe that skirmish has left less shelf life on it. Who knows? But this is a company, with Exxon is the two leaders, right? And with that, what do you think of this guy?
Number one, Trump carries no weight. It's actually between, and not to say anything negative what you said, Jim, because I know he talked to him. But it's going to be Putin and the Crown Prince from Saudi Arabia. And that's where the lack of a better word, folks, pissing contest is taking place. And Putin was basically saying, hey, we'll flood the market too. And what we need to keep in mind is the shale oil producers need to have 50 bucks a barrel to make any money. So they've had to cut back, because you can pump out as much as you want, but you're going to be selling it at a loss. And so I think that we've got a very complicated situation in oil. And I don't think that our president should even open his mouth or get in there to say anything about it. And I got to tell you that is my God's honest truth, because he speaks falsehoods, and he's not in tune with really what's happening. He just wants 401ks to get better.
So what's your opinion on this stock? I mean, do you think it has sold out at 50, or do you think it's got more to go on the downside? What do you think?
I think it's got more to go on the downside, but I think it's going to bounce with the market, as it should. But look at crude. Crude is up less than $1 today. It's still trading below 30.
But it's not anywhere near right now at 19 and 18. So the question is do you think the 18 and the 19 areas are going to hold, or do you think not?
Crude oil?
Mm-hmm.
In crude oil?
Yeah.
They might for a little bit, just because we've not seen them forever. But I've heard $15. Yeah. It just depends on how low the Saudis are willing to sell.
Right. Well,
Right
no,
now
they have a
said
low. They have a
30.
low threshold. They have a low threshold. They say $3 out of the ground and $15 pre-dividend for Aramco. But the key here is if we went over there and offered them a deal and we're going to give them some money and whatever else, then the next thing you know, the music could change a little bit. Let's
I
swing
agree.
over to AMD, and that's
The
Advanced
second
Micro Devices, which seems to trade about as much as anything. 106 million today.
Got it. Last comment on oil. Please, folks, don't get caught up into that the U.S. government's going to go give the Saudis money to settle this deal. If that's the case, sell. Anyway, AMD. I really like AMD. AMD makes chips and makes things that will survive. So AMD's really held up well in comparison to a lot of other members of the same sector. So I continue to like it. I would be nimble. I would be picking up on the way down because essentially this is the 200. It's held, it drifted, came back, drifted, came back, came down, kissed it, and ran up. And now it gapped up, and it gapped above the 100, and it gapped above the 8. So we've got some good technical pictures here in AMD. I do like the stock. I do like the company. They are a long-term survivor. It just depends on what your necessary need is. If you're looking to pick up something within this sector, I like it. It's well traded. Again, go with the options. Play it through the options, unless you want to park some stock and then just nimbly come in and buy it. If it's going to continue to go down, then you're going to look to pick your points and just add to your portfolio on the way down.
All right, let's pick this one up here. It's a healthcare situation with regards to Gilead Sciences. Biogen has been getting some activity, and the other biotechs are starting to get some activity. This one obviously has gotten a lot of press as far as vaccines, et cetera. So what do we think about GILD?
Actually, it's not so much the vaccines. Gilead Sciences is world renowned because they have developed and pretty much cornered the market on antivirals. And how those antivirals work, folks, is that they go in and they've managed to break down the RNA and the DNA of a virus to realize that they can inject it or give it to the human body a protease inhibitor. So if it's a protease type of a virus, then they are going to stop that virus from replicating. And once that happens, we're good as gold. Now, Gilead Sciences, in my opinion, are much closer than Johnson & Johnson, Merck. There was AbbVie. AbbVie's antiviral drug failed. Gilead's has got a lot more promise, and Gilead's got a lot more going for it in terms of that particular market. And if they actually do produce a drug that will stop the replication of the coronavirus, this stock goes to 200.
Another one that had gotten some good ink, but was down today, is that Regeneron.
What's the symbol?
REGN. It went from 271 up to 518, and again, they're getting some press on this kind of stuff.
It's a little bit too rich for me in terms of the price, but again, it will go up if they're also working on a antiviral. Mm-hmm. Then wow, they got a great dividend, or they got a great per share.
All right, well, let's close this thing out, Michael, with Tesla. We got about a minute. Give me a minute to win it as far as Tesla's concerned. Big day up today. Went all the way down to like 350, now back to 500. And so,
I think Tesla goes back to 200.
Okay.
And, and the reason is because this is all hype. Mm. And the reason it went up
to 1,000 on hype, though, huh?
Was the fact that somebody blew out and they had to cover. Mm. And then it's going to drop. And if the market goes down, it'll drop again. So I think it's a matter of finding where fair value for this company really is. Now, granted, they did put out something where they're converting some one of the factories here in Northern California. I'm not sure, but they are still producing, and that's going to add. But whatever they're doing has to support $505 a share. And that's the decision that I think each individual investor has to make. Is it a bad company? No. They have a great product. So no, but I think you have to choose where fair value is.
Yeah. All right, we're at the top of the hour, Michael. Let everybody know again, if they're not familiar with you, who you are, and of course, your website or some way to get a hold of you.
Right. Let me just check right here, Jim, because we got a couple of things in our chat boxes.
Oh, okay.
Oh, that's my site. Oh, good. On options, the strike price. Okay, just to answer this question real quick, I don't know which stock you're talking about. For a recommendation on options, but I would send it to Jim.
Well,
For
no,
me,
what they could do is like I say, after the broadcast, they could email you and contact you and discuss it. So why don't you let people know how to email you and get a
Sure.
hold of you, and then you can handle their questions at a little bit more of a a calm speed.
Sure. Right there, you can see my site, logicalsignals.com. Secondly, you can reach me by my email is, I'm going to put it in right there, Michael at logicalsignals.com, and also Michael at mjf1partners.com. Either one will get directly to me. I will answer questions. Please stand by. The website's being revamped and switching over to trading futures and daily commentary.
Okay, sounds great, you guys. And I have a weekly market update that I send out with my opinions and my observations on things. And so obviously, if you'd like to receive it, you simply need to give us an email at optionprofessor@gmail.com and get in the queue. And we'll make sure that each week that you receive my observations and my opinions. Right now, I am going to send it back to David Kosmider. Thank you, everyone, for being here. Good luck and good trading. And we'll be talking to you soon.
All right, thanks guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. Or you can also go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted, or any of the past shows there. And I just want to thank my guests again for this week. Michael Filighera of logicalsignals.com and Jim, the option professor at optionprofessor.com. Thanks, everyone.
Thanks, David.
Thank you.